Hey guys, welcome back. In today's video, we are talking about the AMC Moass, the bullish momentum, the limit of AMC, and many more in this video. First, we're taking a look at this. The head of theatrical distribution for Amazon said they're giving audiences a reason to leave the house. So recently, we've seen some big news about the movie theaters and of course AMC as well. We're essentially seeing Netflix embracing theatrical. We're seeing Paramount putting more movies in the theater, the theatrical window being increased, and just like that, streaming reached its crescendo. And so this is very important because we're seeing a whole new market opening up for AMC. We're seeing that existing audience for streaming to now transferring to that movie industry as well. Now, we've already said this was going to happen. We've already seen from the data that the growth was happening, but this is just adding on to top of that. So streaming might have killed the video store, but theatrical is the firm foundation of which AMC Theatre stands upon. And so now we're having that momentum, we're having that movie foundation to really come through now. And this is what AMC has been preparing themselves for the last 5 years. We can even see Adam Aaron AMC at Las Vegas Theatre Convention for day 3 or 4. We're seeing news coming out all week and every bit encouraging for AMC's future. AMC Theatres is more valuable now than at any time in their 105-year history, and stock will soon reflect it. So we've seen the 105-year history for AMC, we've seen what they've done, but recently they have definitely done so much more that is extremely pivotal for AMC. We've already talked about how they're capitalizing on this market, we talked about how they're becoming even more efficient, and so as we see the days go by, as we see the box office get bigger and bigger, you're going to be starting to see how AMC will start making more and more money. We can see here, Adam Aaron talked about with the partnerships of Netflix. Netflix has said publicly and AMC has said publicly, we expect to do more together in 2026 and beyond. AMC has announced that we play Greta Gerwig's upcoming Narnia in cooperation with IMAX. But we don't want to wait until then to do more with Netflix. We would love to do more with Netflix right now. So the big thing about this is, firstly, this is going to open up even more of a revenue stream for AMC. And that's exactly what we have been waiting for. Anything that allows AMC to increase their revenue, to then increase their profit, to then paying off debts, improving their earnings sheets, that's what we want. Because we don't only want apes to invest, but we want people to realize the value there is in AMC. And that exactly is what's going to show, added on top of everything else that AMC is doing. But there's so much more to this. Because they've been talking about this, it feels like right now, behind the scenes, there might be even more that they're working on. It feels like something is brewing. And just like we've said previously, Netflix they thought they were going to overtake the movie industry. They thought they were going to make the movie industry obsolete, the theater industry obsolete. But now we're seeing them to join forces with AMC. And it feels like they want to do something where it will take both companies to that next level. So we may be looking at a major partnership coming very, very soon. Some other things that we're looking at for the fundamentals for the future. Firstly, Adam Aaron has said that he's confident Hollywood's output of films will continue to rise and keep the box office current hot streak rolling. So there's an important thing about this, because even with less movies, and I'll show you this guys later on as well, we have done exceptionally well. But if Hollywood's going to then increase the output of films on top of how well they're already doing, then that's going to increase the box office even bigger than it is now. And we definitely understand how AMC is making money off of this. And you can also see that Adam Aaron talks about the first time since 2019, we're going to see some material growth in the size of the box office to a somewhat respectable level. Revenues are finally growing again, which means that operators are going to be more profitable and reinvest that increased cash back into their fleet of theaters to upgrade them. Now, this is an important fact I want you guys to take away, because he's obviously talking about how profits are going to increase, how operators are able to make more money. Now, this is already hinting at what the balance sheet of AMC is going to be looking at, what we are going to be seeing in the future. But on top of this, we see them talking about increasing their theaters. This is very important because ultimately how AMC has managed to position themselves to do so well in this current state of the box office is because of the fact they have been investing into their theaters for the last 5 years. So if they're going to continue on top of this, it means that they're trying to get even more of the market share that they have right now. So it means that in the future, we're going to be seeing AMC become even more efficient, and you're going to see that 30-50% of the box office going towards AMC as opposed to the other. And that's how they will try and get the majority of the value of the industry. And that's what we want to see. Earlier, I talked about the less movies and why that increase in output is important, and here is why. Day 15, AMC box office still posting all-time high despite significantly few movies. AMC will dominate market share and now has record concessions, merchandise, retail popcorn, and HYMC investment. So we've seen how well they're doing. And what we have to realize is that they've done less movies than in the past before. If you compare that with 2019, 2018, you can see the differences in the movies being released. And we can see here 100 movies released, 494, and you're seeing 191, 187, but a lower gross back in 2019, back in 2018. And so this is very important, is because we are going to be seeing the movie industry going back to that state again, where we are going to be looking at 187 movies getting released, 191 movies getting released, as opposed to the 100 movies that has been released. And so on top of how well we're already doing, you can imagine how big the box office would have gotten if we were able to release 187 movies, if we were able to release 191 movies. The box office would have gone even bigger and AMC would have made even more money. But it already shows just how big we are right now. And so if we are seeing an increase in the output of films, you can see an increase then in the revenue, in the profit of AMC, and ultimately going to talking about paying off the debt and issuing out dividends. So this is how we know the shorts are over, because they wanted to bring AMC to bankruptcy, but they have failed to do so. So now, because of how well we're seeing the box office doing, because of how efficient AMC is, we know that there is no possibility of bankruptcy, or at least there isn't any that we can see so far. And so this is how we know that the shorts are over. And one of the things that I was talking about as well, you can see, when I think about the short sellers trying to short AMC below $1, when box office is on fire so far this year, many thoughts come to mind. Now, take a look at this, and I've mentioned this as well. Essentially, you can see, so AMC today closed at 161, and you can see the last time we closed around this level, the last time we were at this level was back in 23rd of January to kind of 22nd of January. And since then, we knew that so many positions were built up, so many short positions were built up, kind of going down as AMC was going down to that 0.93. We know some significant levels where people built short positions. Firstly, around the 130, this is what we talked about. And then secondly, also below the $1. And so we know that shorts open their positions up in these two major levels. So now as we see AMC goes towards 161, these short sellers are losing drastic amounts of money, especially the ones who open their short positions below $1. But not only that, they obviously also have the borrow rate that they had to pay on top of the reds that they are already facing. And so this is how we talked about why the shorts are over, why their theses are wrong, why they're getting attacked, why they're getting unstressed liquidity, and why they're going to get margin called very, very soon. Now, today we see AMC ending in the red, but there's a big reason for this, because pre-market, we already saw volume coming in. We saw AMC actually at 1.72, up 3.3%. So this is what we're seeing pre-market today. And now this is very important, because the reason why this is happening right now is ultimately how people want to bring some institutions into a very stressed situation. The reason why I say this is because of the options. So one of the things we talked about is, of course, the 150 options. And everyone is obviously keeping their eyes closed, peeled on this, because the higher we are, the more deeper and deeper in the money these 150 calls can be. And then we can talk about that $2 calls. And we talked about this with the open interest. You can see with the options here, the 150 calls and then the $2 calls. So 150 calls are already in the money. And if we are able to then close, and this is very important, Friday above 150, you're going to be seeing the major pressure that is happening. But then on top of that, if we're able to see AMC close above $2, then that's even bigger pressure that we are able to apply. And ultimately, we talked about a gamma squeeze. Now, the volume, the open interest for these calls aren't as big as some of the ones we've seen in the past before, but this is still going to have a significant effect. This is still going to have a significant push to the price of AMC. And so, yes, we had the red day today, but we are still above 150. And so tomorrow is a very important to know what price we're going to be ending at. And so if we have the options go in the money and then we can get the shorts covering, you can expect the big move up in AMC, and that's ultimately what we want to see. One of the things that people then may say is that AMC saw a red day today. And to that, of course, AMC did see a red day. But you have to realize prior to this, we've seen AMC have 11, in fact, green days in a row, 10 green days in a row. And so to talk about just having one red day, it isn't something that is detrimental to AMC, isn't something that's going to be damaging to AMC, considering the fact we've already gone up by more than 50%. And so the red day is only allowing some short sellers to see their P&L go from a red to a smaller red in comparison. The ones who open up their position back at $1, they are seeing their position losing massive amounts of money. So this red isn't going to allow these short sellers to suddenly see a relief. It is just losing $1,000 as opposed to losing 1,500. And so there is nothing to be worrying about, at least in my opinion, because ultimately we want to see if we can firstly stay above the 150. That's the things I'm keeping my attention to. Now, AMC, some people are saying this, is that AMC is doing what GME did 2 years ago, where GME dipped under the psychological level of $10 before exploding to 70. Now, AMC essentially done the same, where it dipped below the psychological level of $1, and we're seeing that coming soon, that massive rise up. And we already are seeing the early stage of it. So right now for AMC, the sky is the limit. And this is how we understand that the big things are yet to come for AMC. People may be excited over the 50% move, but there is still so much more that is to come for AMC. And so as long as AMC remains anywhere under $100 to $250 a share, our enemies have a retail buying problem. We may not buy as much, but we can keep buying. So this is the biggest thing to why we are able to see AMC have this movement that we are seeing right now, because we've talked about this. When shorts brought AMC down to $1, the thought behind it was that AMC is now $1, AMC is now below $1, so all retail sellers are going to sell. That's what they hoped it would happen. But the very opposite happened, where when AMC got to $1, when AMC dipped below $1, instead of people panicking and saying, oh no, it's below $1, let's sell all our shares, they actually viewed it as, oh wow, it's super cheap now. I can buy even more shares at a lower price, let's do so. And that's how we're able to put this situation on the shorts right now. That's how we're able to put this liquidity stress on the short sellers, and is why we still have the squeeze ongoing. And you can see from the technicals on the 90-minute, we're still seeing AMC doing exceptionally well. Like we said, there is so many technicals analysis of AMC right now, just showing how well we're doing. And that's exactly what we want to see. And we're also seeing how new buyers are piling into AMC at the current price level of the stock. So even if the shorts dropped the price to 0.01, people will still barrel in with even more buying force. And this is just the same logic what I was saying earlier, and it's how we're able to then keep AMC alive and still pressure these short sellers. And so, because one big thing is that we never know the moment they may lose control of AMC. One day, and the stock price is double or triples in a flash, maybe much higher. So this is why people are constantly buying into AMC, because essentially no one knows when the system will break. Just like no one knew what was going to happen during these crashes, during these flash crashes, the same applies for AMC. And so it's because we're doing this, it's because then we've realized this, that people were wanting to captivate on this opportunity. They want to capitalize on everything that's ongoing, and that's how we're able to get the squeeze. That's how we're able to get that Moass, and that's why the short sellers recently have been kind of doubling down to push out potential bad news, but more importantly, to try and manipulate AMC like we've seen, but they're failing to do so because of everything that's ongoing. And if you want to see what will happen when shorts are forced to cover, you can take a look at CAR. This is what we talked about. Now, this is just a small example. The reason why I say this is because of the fact that they don't face nearly as much synthetics as AMC. But you can see how this is also a gradual covering, a gradual increase. And that's what we're seeing in AMC right now, but it's going to become even bigger than this. It's going to become a lot more. It's going to be 10, 100, 1,000 times what we're seeing right now, but it's going to be the same logic being applied. One of the things we're seeing in our other investments into HYMC is you're seeing how Lincoln Capital is mirroring Eric Spot, where they're buying even more shares. And so if you think that HYMC is overvalued right now, then you gotta wonder why all of these firms are willing to be buying HYMC at this current level. We're also seeing how a big breaking news is that banks are pulling 10 billion out of the Federal Reserve emergency repo market. So we've already talked about the liquidity issues, and now we're seeing the banks that are in distress. And this is something that we've been expecting for a very long time. It's just that we're seeing that happen right now. And we're also seeing how the leveraged short sellers who are getting squeezed right now, who are the exit liquidity because of what's happening with the S&P. This is something that we have been talking about for a very long time. And then you're seeing how Charles Schwab allows retail clients to trade more cryptocurrencies, which seems like they just want more liquidity in the market. And so if we are seeing all of this with the sole purpose of increasing liquidity, then it starts to make sense about why we're seeing all of these stress problems that are happening and how the short sellers are trying, and banks and market makers and institutions in general are trying to get out of this situation. As always, now this is financial advice, and I'll catch you guys next time.